Well, good morning, everyone. It is Friday morning. Welcome to the Hawkeye Morning Trade Lab. I'm Brian White with TraideMasters, and again, Deb and I are filling in for Al this week as he's off in Germany. So I'm glad you are here with us for our final pre-preview session this week. So for those again who are newer with us, Hawkeye is not a hype room. It is not a blind signal room, and our goal is to not chase every candle that moves. Our goal is to move to slow the market down, get some real conditions, get the market conditions, the market weather, and only consider a trade if it actually sets up and actually qualifies. So the big idea this morning, looking at over everything, is movement is not enough. We have to qualify that opportunity. So let me go over and turn this off again. This is for educational purposes. I want to make sure that I'm on that. And let's go over and see what we got in our 8-pair Hawkeye radar overview screen. Again, movement is not enough. We qualify the opportunity. And that may be the most important lesson we can end the week with. A trader does not need to keep busy, but needs to be staying disciplined. Sometimes the most professional things we can do is sit on our hands and say, not yet. So we've got all sorts of things happening. Quick reminder before we look at really anything, everything we do here is again for educational purposes only. This is not any sort of financial advice, or we're not going to tell anyone what to buy or to sell. Each trader is responsible for their own account, their own risk management, and their own decision. Our job simply this morning is to not predict anything, which is very hard to do sometimes. Our job is to try and ask better questions. So the question is really not, can I find a trade? Because we can. We put a trade on this morning, Al and I, just for testing purposes because we're having a little platform issue. The better question, instead of asking, can I find a trade, is has the market give us a qualified Hawkeye setup? That's really what we're going to be looking at. So again, we want to follow the routine that we always do. That first 15 to 20 minutes of our Hawkeye session is all about learning the market weather. So when we look at the Friday's a lot different than what it has been on Wednesday and Thursday. So again, we're going to start with our calendar because the calendar kind of helps us decide how aggressive or patient we need to be. Today is definitely not the same kind of high impact session threat that we had earlier this week with the CPI, the BOC, ECB, and PPI. And you may be going, what are all that? What is all that? Well, I'm glad you asked because a video is going to be posted today in regards to what is news, what does it stand for, and all the details behind what a CPI, BOC, ECB, and PPI are. And that way you understand when they pop up what they mean. So those are a lot heavier news items. The heaviest piece we have today is on the GBP, Great British Pound. Their GDP month over month is coming out. And it's already come out really before the session even started. So, but that does not mean we ignore the risk. We still have some U.S. consumer sentiment coming out, inflation expectations later this morning. I think that's around 9 in the morning. That's Central Time, by the way. And that can really impact the dollar, gold, and the overall risk tone of the morning. So today is more of a normal trading day other than being Friday, but we're going to trade with some caution. We're not in a panic mode, which is nice, but we're also not going to force a Friday trade just because this is our last preview session. So if I had to give you a nugget before we start, it's pretty much a light calendar day. Does not create just because it's light doesn't create any sort of permission to be careless. We want to stay disciplined. It just simply gives us more room to let the charts qualify. We'll see how that goes. Now, I do want to jump over because there's not a lot here. I do want to go over into our Dixie account, Dixie being our dollar. I'm going to change that back to Aussie and go here with our Dixie. I always remember what that's at. So we're looking at the dollar, okay? And let's look at a little higher time frame and just get a picture of what it's doing. We can see very, very simply the trend overall since May 12th has been overall up. It's sideways. You got a rally base, rally kind of basing again. So we're going to look at this because the dollar is still one of the main weather reports for the morning. On the higher time frame, the Dixie has kind of pushed us into a decision area. You can see where we have some supply up here, some demand up here. We've got a ceiling that we breached but we also have a monthly ceiling up here because we're in a decision area. The dollar's not dead, so that's a good sign, but it's also not giving us a very clean, smooth continuation right now. So dropping back down, this is a big picture look. Going back down to the 1 hour, you can see how flat it is. It's kind of fading to the short side. After rejecting that higher recent push that we had, which is right here, it created that Sherlock zone. Um, and that kind of supports our read that the dollar is weaker in the immediate window. So looking at our 15, we can see again, it's more sideways, but with a bias downward. And we can see that our tide fusion, even though again, tide fusion set for that 4 hour chart, set on defaults, it's not quite set up like Al's is, and we'll fix that next week. But you can see it's sideways again with the trend going downward or the bias, at least at this time. Again, this is just a 15 minutes. So here's the caution. The short-term weakness is not the same thing as a finished dollar reversal. It's not a reversal yet. The Dixie is still not giving us near important structure formation. So if it happens to reclaim the stop pivot area there, the dollar short ideas can really kind of fail quickly, and it's bouncing right off of this pivot low. So it really we don't want to trade the dollar from memory that we think. We want to trade the dollar if we're going to trade it from what it's doing now. Now, understand we're not actually going to be trading the dollar. We're going to be, but it impacts every U.S. pair. So understand what the picture of the dollar is. It does impact our momentum. And right now, the dollar just says short-term fading, but still in the larger decision zone. So we've got a bigger picture on the higher end. So when we go to another weather key, we're going to go to that gold on the 4 hour chart. I like to look at the 4 hour chart. I can go up to the daily, but again, the picture's strangely similar to our dollar. We have this trend down and a bounce up, which is really kind of strange. So looking at gold gives us just another piece of the weather report. Like I mentioned, we're really trying to read the dollar pressure and the market reaction to it. The bigger gold picture for the 4 hour has been really, really heavy. Look at that downtrend. Gold sold off hard, and it's now trying to bounce back from that lower area that you can see. Going down to the 1 hour, you can see Sherlock is just telling you just pressure, pressure, pressure. But we do have some recent support. So the bounce is moving into that resistance area, so we've got to be careful. And that makes this a reaction zone, not a clean, confident signal area. So I would just be real careful again. I would not use gold this morning to say everything is bullish or everything is bearish, because that's not true. Gold is actually saying that the market is reacting, but still not clean. And you can see that on that 15-minute chart as we go back down to a normal day trading chart. It's just not real clean. A bounce into the resistance is still a test at this point. It's not any sort of green light. If you got questions about that, let me know. Gold and Dixie are on the chart there, quickly reviewing it. And then I change it back to our US yen, since that's one of the most. Remember, when we do our Hawkeye sessions, the pound yen, US yen are our primary pairs that we use to guide the market weather. And I can see that, oh, yuck, I moved that. I can see that our test trade is not doing so well. I was very squirmish about taking it at this time, but just get a broad look at our eight pair Hawkeye. Now you can change these up if you want. This is where we really want to narrow down the board. My first read is mixed and unsteady. We really don't have any broad commitment behind any momentum right now. Look at our Hercules. One spread, one spread, one spread, three spread, two spread. We do have a four spread on the pound US, but look, we're right into headwind. And then we have a one spread, two spread. This is a perfect picture of what Hercules, Tide Fusion, Sherlock are designed to do. Keep you out of a trade that you should not be in. I am going to shrink this up because this was not done on a Hawkeye. This was just me trading. So I'm going to move and save a little bit of money because I have a feeling we're going to lose on this. We have a flip on that. It really wasn't a Hawkeye setup. It was testing our position size. And I digress. So again, let's get back to our radar. Man, This is going to be a learning day, I think, and we're going to have to wait. So again, our recording will go about an hour, and then we'll shut it off, pause it. If we see something, we'll re-engage the recording. So the important thing I see here is that most pairs are not showing any sort of clean Hercules spread of 5 or more, and that matters because the Hawkeye plan actually looks at the spread to qualify the trade. Aussie US would have been our one when we entered the trade. It was a 4 or 5 spread in our favor. It is now flipped. It's really the only one that qualified, but the location, even when we took it as a test, was really questionable. And Al will tell you, I didn't really want to get into that one. We did it only to test the position size. So that means we do not call it a trade because it was close. So really top watch list today, I would potentially say is the Aussie US. Obviously, it's kind of hanging there, but really I've disqualified that at this point. The pound US could come into play. Obviously, the US yen is very critical. We got to sell. Again, that's the Tide Fusion sell, but we don't have any follow through. So I'm not getting into it because it doesn't have the follow through there. We want to keep an eye on that Euro US. Again, most of them are sitting into headwind. The pound US may be one that we can consider, but notice our Tide Fusion ribbon and line are flat. There's no direction. So again, these are just not pretty for a Friday morning. So not a whole lot to go on right here. So again, trader nugget for the morning on this is we want to be very, very careful. I would say the radar is definitely not a trade list at this point. It is definitely a preparation list. We see no 7. I'm assuming the 7 is going. I'm going to go ahead and just close this one out. Save that 1% and get a fresh start. Since it's not a real one that we'd use, I'm going to close that out and see a clean here. There we go. I would say I'm assuming that the 7 is most likely our Kiwi, since that's the one pair we don't have. Let me go ahead and just throw that on there so we can quickly look when we want to breeze into there. USD. And again, I'm just putting it on here for just to be able to see it. And I'm going to like my pairs in order. Let me go ahead and look at it and see what we got here. It's the 7-2, but again, even a 7-2 Kiwi US. So 7 is our Kiwi strong. Our weakest one is CAD. So if you like the Kiwi CAD trade, that's an option. Again, we aren't chasing. That's the whole point. We usually take 12 pairs and then try to slim it down. So we're watching the Aussie US. Let me just tell you, at the time when we started the beginning, I was here around 5. It's this morning. I got a little bit more rest than normal. It was our best relative Hercules look, but we really couldn't define anything. It is definitely not in a position, in my opinion, to structurally change, as the Hercules is not in a position. Now, we did have a pullback. And we do have the US dollar appearing at this time to boost itself up to the 2 mark. And the Aussie's now at the 4. But again, Hercules is not telling us anything that we really, really, really like. Knowing that the yen is a 3 and the US is a 2, we can keep the Kiwi US sitting right here for now. We did get a buy signal on this. And we could take a bite at this one. It's not really a great time. Let's look at it real quick. Yeah. Very, very sideways. And let's do something like I taught you guys yesterday. Just briefly, I'm going to do this. Get off my 15-minute and I'm going to go to the 1 hour. And again, I taught you guys this yesterday. Come into your charts, what we call naked trading blindly. Go with an extended line, or not extended, let's go with a horizontal line. Mark your spot. And what you want to do is, where can you put the line where it goes left and hits the most spots? And we did that, okay? Nothing magical here. We're going to do the same thing. Most recent bottom is the most important bottom. I would say, I would even bring that up to that area. And this is the playground now that we're working with them, helping us guide us to see where we are at. Now, if we wanted to go long, Probably would have been easier to do it later. Pull this back into here. It's showing a buy. We need to be able to get 17 pip movement. If we go in, doesn't mean it won't work. 17 is the top of that zone. Now, I will be very, very careful to tell you, we're sitting at a 7.2, which is a 5. Not a lot of follow through this morning. Everything is somewhat pointing up, but we are into this zone, but this zone is almost clearly gone. So it is structurally okay. I am going to go ahead and put a buy order, show you my problem that I've been having. I'm putting 1% risk. I'm going to go here and put pips, and I'm going to put 14 because that's our hard stop per our plan. Go in here and put 17.5 as our hard. I'm going to go ahead. Notice it says our risk reward is 1.25, which is intentional. I'm going to go ahead and put my buy. Now, if you notice, my risk is only $5.37. It should have been $22 as I mark it. We're going to figure out why that's the case. And so we've already made 15. At this point, we can do nothing other than, per our rule, come in here and measure from the time that we entered 10 pips up, which is going to be right at this high, which is absolutely perfect. So if and when, I'm going to take a ray this time, if and when we reach this spot right here, even a slight touch, we're going to take a portion off. So what is the portion we're going to take off? I'm going to take off my handy. We're following exactly the rules that we manage to do every time. I'm going to say we have a position of 38, 37 times, and we're going to take 25% off. So that means we're going to remove 960. So I'm going to remove 960 as my reminder. Now, Al will come in next week and show you a very, very cool way of automating that. And so it's much easier. He'll have his setup to where once it touches, it automatically does it. The only thing he'll have to do is adjust his stop to the 7 pip mark. And so now we can confidently, and as of yesterday, if y'all recall, yesterday we did the same thing and we walked away, not really walked away, but changed charts. And boy, did we hit some great trades yesterday. We did not have a losing trade yesterday, which is fantastic. Had 3 winners. We had the pound US, Aussie US, and I can't recall. I mean, euro yen on one of them. I can't recall, but it was a great trading day. Followed all our plans. Everything hit the 10 pip mark. We had one of our trades of the 3. One trade went to the full 17.5. The other 2 were at 7. So remember, years ago, our goal was always 7 pips. And so we were able to be confident about that. So right now we kind of sit and go back to our review. We are now through our market weather, but I do want to touch on the pound yen because that is definitely one of our weather. And you can see, again, we've got our lines and you can see that this is very, very tight. So looking on that higher time frame, always go to that 4-hour chart just to kind of get a picture. Notice how tight our Sherlock is. We do have a 4-hour buy on it. That's based on the default. It's not a real tide fusion. So on the higher time frame, it's still near important overhead areas. On the 15-minute, you can see that it's been moving kind of flat to sideways, not giving us any sort of clean, wide open path. And this is a perfect teaching chart because our newer traders often see movement and want to chase that. But again, Hawkeye forces us to ask the questions, are we late? Are we buying or selling into a wall? Do we have Hercules spread? Are we tinkering? Are we making up rules as we go? We don't want to do that. So do we have the room on this case? No. So strength at resistance is not the same thing as a qualified trade. So you got to be real careful. Again, we're trying to be very protective because day traders, 93 to 95% lose money. We want to be very, very careful here. Quickly moving over, that's the pound yen. So it didn't really give us much. Let me look at, just quickly change this to the US yen again. I don't want to get too heavy on, but this is a definite weather. And we have that sell. We just don't have the momentum behind that sell at this point. It looks pretty okay. You got some room. So and this one's important because it's connected to the Dixie. So it sits around the major psychological area that we've been talking about all week long, 160. But the short-term chart really shows rejection. and weakness from the higher area. So the 15-minute picture is not real clean. So US yen is just a warning chart this morning. It may become useful if the Dixie gives us some cleaner read, but right now it is not a chart you really want to force. Big levels create big temptations, so temptation is definitely not any sort of confirmation. So again, that's our US yen, and we're going to flip back here as we've earned in the last 3 minutes 19 cents. It's like being paid like a teacher. It's fantastic, but we have to be patient with it. So trade plan rules, again, we want to review this and making sure everybody understands. Back to that, and I don't want to pull up the Hawkeye trade plan. If you don't have it, definitely let me know and I'll shoot it out to you guys. It's something that's a living document. You can change it, you can adjust it. As a matter of fact, we're going to be adjusting it together next week when Al gets back into town, or whenever he decides to show up and back in town where he's not millions miles away. We're going to go over because we didn't include any rules for news, and I think that was critical last week, and so we need to make sure we agree on what that's going to be like. But a trade does not qualify just because we want one trade. It seems like when we get into a Hawkeye room, we're immediately going into we got to find a trade. We got to find a trade. And if we don't find a trade, we don't feel like our purpose is being met. And so we got to be real careful with that. Let's look at this one here. Now, we did create a demand zone that's being respected. I kind of like this one. Let's look at it on the 4-hour. Yeah, I kind of like it. Got a little whippy up here. Look at our 1-hour. We really want to break out. So you got two options here, in my opinion. You can take the option now as more of aggressive entry, or the breakout when it passes through. So if we take it now, we're going to expect it's going to come back here and pull back. So I'm going to go ahead for educational purposes only and jump right on in and change this up. And I'm going to change my pips. I really like how Al taught me how to put the pips in there. Much easier. Don't have to think. It's 22.48. We're going to go in there and notice it says $2.35. So we're having a platform issue now because now we've got the issue of one pair risking much more than the other pair. So we need to be careful about that. I'll do some research on it today and see what we got. But I really like this. To me, this zone right here is a minor zone, although it is sitting at a 34.25 area. It's been penetrated pretty much all the way to the top. It created pivots. So that's my only concern there. But we've got time. There's no major news again today. And we saw that creep up to a 5 on the charts. Now it's a 4, and that's okay. Remember, our trade plan does allow for a 4, but when we entered it, it was a 5 spread. We've got a 6 spread here doing very well. We have a 4 spread here, a 5 spread here. We could have stayed in that trade, but again, we didn't really qualify it like we normally go in through the routine. It didn't look right. So we've got some spreads finally happening at the 6:30 Central Time mark. So again, trade plan. Briefly, we have a hard stop at the 14. Before any Hawkeye trade can even be considered, we need to make sure there's clean structure reason. It needs to be a retracement to a true area. It needs to be a breakout. There needs to be a reason to get in, not just because I've seen this before, I know it's going to work. It needs to have a spread of 5 or more. We need to have room to a 10-point checkpoint. 10 point is really where we want to go. 17 is great, but we need to make sure we have clean air to the 10 pip mark. So we can possibly get to that 17.5 mark. No major Sherlock levels. When I say major Sherlock levels, I'm talking probably most likely when we're looking at the 30-minute to the 1 hour, because the higher the time frame, the more significant the Sherlock becomes. Fair value gap. Al's going to work with me in the summer to truly understand that. I don't have one of those because I don't trust them on the one that I have. I didn't trust on my screen, so we're going to leave that one alone until he comes back. And again, support resistance, which is our Sherlock again, knowing where those lines are, being able to draw those green, that's resistance line, that's a support line. Having those lines, when you see those dashed lines, those are really good to have as you're learning. Let's make sure, again, 14 pip hard stop, 17.5 full target, 10 pip mark to close 25%, remove that will remove that 25%, and then we'll move our stop to a +7. That +7 will help us not only have a profitable trade, it also helps us overcome any sort of commissions. Okay. It's going to help you have a higher win percentage overall, and that's okay. The key is to protect the capital. That's more important than anything else. So the nugget for today on our trade plan, trades, again, we've said this before, trade is not qualified because we want it to be so. It needs to qualify because it fits the plan. So, and really what we don't really have to look at our candles anymore. What we do is we look at our spread. Now notice 6-1 is it's going back to the other side, the downside on that one. 1, 1, 3, 2, 4 still holding, and 6 still holding. We're in good shape at this point. Okay. We're on the 8 pair radar again to just kind of keep an eye on things. And this seems to be a process validation morning. Golly, another one. But it's a Friday. It's typical. So we probably will have a shorter session today. The Dixie again is fading short term. Gold is bouncing into resistance. The Aussie US is flipped, so it's not qualifying. The pound yen is active, but it's not really giving us anything clean. The US yen is just a warning chart because it's near those major areas. So our final free preview lesson is not what we found, not necessarily that we found a perfect trade yet. I'm guessing that the lesson is going to be that we have to process and keeps us from making sure we learn some confidence in finding those setups. So if something qualifies like the two I think that we're in, we'll see how those roll. Again, I'm not going live on any of these. If I was going live on any of it, would have been the Kiwi US, not the pound US. But I didn't, just for hard to go live at the same time as leading a group. And I didn't even bring up my own platform yet. So our job is not to chase the movement. Our job is to qualify the opportunity. So movement is not enough. Qualify that opportunity. And again, our job is not to chase. News was very, very normal, leans to cautious. I think the early pound data has already been released, and it's already been priced in. And so we've covered what we need to cover. And we wait. And we just enjoy the sounds of the music and knowing it's a Friday. Again, for my personal rules, I'm assuming Al's going to be the same way. We'll never have more than 2 trades going on simultaneously at the same time. Because of correlation issues, because of risk issues. Remember, our trade plan says we cannot lose more than 2 trades at a time or we have to be done for the day. So if these happen to turn against us, both of them, and they're losing trades, that is 1%. It's actually less than, based on my numbers here, it's actually less than the 1%, but still, we'll figure that out. Something's not quite right. Not exactly sure what that is because I would definitely want this one to hit and this one to lose at this point because this one's going to be the one that makes us the money much greater than this. These should be relatively close. Now the pip values may be slightly different, but it should not be that different when I said 1%. Did I mark? I did do marking that one. Let me mark this one up. We did not mark this one for our 10 pip move. It's going to be very similar to the other one. Let's take our measurement tool. We got in right here. We're going to go to our 10 pip mark. And that is going to be slightly higher than our zone. So we're going to take this ray, put it right here. And then we're going to calculate 25%. Okay. We have 1,675 times 0.25. That is going to be 419. Remove. And so we can do this type of thing to make sure that we, when it does hit that area, that we're ready. And remember, yesterday it flew right on by, and we actually sold our 25% in here, only to see it come back and hit our stop at 7, which is okay. But we got a higher 25%, which was a nice problem to have. So we've got a 5 spread on this one still. We've got a 4 spread on this one. Let me get this to where we can see it better. Get this one now. The problem with this one is our zone right here is going to be sitting right smack in the middle of that Sherlock zone. We could probably turn Sherlock off for now so we can see our line better. And we just enjoy the 50 cents. And we're still, again, we're sitting at 6 and there's just no follow through. Okay. So Hercules is doing its part, but Hercules cannot control volume and pressure. And again, we are at the 6:30 mark in the morning. I would anticipate some more volume. Doesn't mean it's going to be volume in our favor, but I would anticipate some more volume here in the next hour, hour and a half. 30 minutes, I would say, 30 minutes to an hour. But we get our good learning in, give you guys some value, and then we trade. And if it's there, it's there. Okay, guys, just so you guys know, we have revamped the YouTube channel. Make sure, if you have not already done so, visit the channel. Even if you're not a newbie trader, go through the Start Here roadmap. It will be a helpful tool to you. Each of them is about 30 minutes in length. I made sure that they were learning at 30 minutes because I have found, especially with fourth graders, and adults aren't much different than fourth graders, that we've got about 15 to 30 minutes of what we call real focus. Now, we can watch videos and not really focus, and we can hear and learn some stuff, but real focused learning happens within the first 30 minutes. So I did my absolute best to put that in a 30-minute format. Also, you can review our weeks of Hawkeye Morning Trade Lab. Moving next week, these will stay the same. All the morning lab will go into our members only area. So members can always review those in the area there. Same thing with our Tide Fusion, our Tide Savvy Trader. I may put one more up there for our public preview, but after that, it'll go back into our morning sessions. And we will keep these probably for six months to keep them relevant. And then we may come back and offer a potential 1 or 2 open previews. And as you go through, again, these are our trading tools. You'll see some of these were up here, but they're kind of more of an in-depth look at some of the tools we have, education. I will be adding another one today in regards to news. That's what I don't want to start that. But I will be doing that to news. Let me move that back to there, just so you guys can, because here's what one of the questions: what does the CPI or core PPI? That was the question. It was, what is core PPI and how is it different than PPI? And what is PPI and what does it impact? Those are great questions. And so when we go into, let's just show you 2 days ago. Now, these type of news items happen month to month. Some of them happen quarterly. But if I say, oh, yes, the U.S. has a red folder, I need to know what this is. And why? Because it's going to impact certain pairs. It's going to impact certain stocks. It's going to impact certain futures. I need to know what a BOC is. I had somebody ask me what the BOC was. That is your Bank of Canada. You need to know what a BOC is. And so I am going in depth in a 30-minute video, about 30 minutes, of what these are and what they do. And that way, when you're not looking just for a red folder, but you have an understanding of what they are. This being one of the big ones, by the way, overnight rate changes. And we'll talk about that as well. So hopefully that'll be helpful. And just like that, we're losing money on both trades. We've got now a 7-2. It looks like the US dollar is trying to find some strength. Fantastic. Or weakness, I should say. It's going weaker. Let's see what the Dixie's doing. It's still doing what it's doing. But again, we said overall the US dollar is going to be going down because it's trending down. But if it breaks up, we potentially will be on the wrong side of these trades. Let's see what gold is doing. Gold is still pressuring down, but kind of bouncing there. There's nothing there to hold it other than algorithmic trading. Just as I mentioned yesterday for you guys, the ribbon that you see in Tide Fusion is several combinations of moving averages doing calculations behind the scene. Okay? It's not just a moving average. So it's going to play and look like moving averages, but it's taking a lot more in. The dotted line, I don't want to call it a moving average because everybody thinks any line that's moving like this is a moving average. This is not. This is a calculation of several other tools. And I took those tools and made it a visual. That's all that is. So it will play like an algo. So this may have some algo if it comes in this area. It may, but I don't think it will. Strangely enough, though, we have found that many times price is halting at this line. Self-fulfilling prophecy, I don't know what it is, but it's kind of cool how it works. But just so you understand what those are a little bit. But the gold looks like it's still, even though things are pointing up, it looks like right here, the thinning of the ribbon, it looks like I might want to turn, and we've got some confusion here. And just like that, we're almost break even, and we've spent about 15 minutes earning no money. It's a great job to have, just like teaching. If I took my teaching salary and put it based on hours spent, I would not be surprised if I'm less than double digits hourly. Just kind of a sad state of the union. Not complaining. I enjoy the kids. I enjoy the kids, especially during summer break. I've actually had a few of them uh, email me, tell me they miss me, want me to come visit their soccer games. I'm thinking it's 94 degrees while we playing soccer outside. Give me the indoor sports at this point. I haven't even got in shape to play golf yet. I might play golf next week. Once things settle down, I get done with all these videos. I've got so much to do. I have a checklist for Hawkeye that I created. My gosh, I have over 184, I think it's 184 tasks that I have to complete in the next 7 weeks. It's going to be fantastic. It's what I really enjoy. It's what I'm passionate about. And I like teaching too. I like this school environment. I like this environment, but passion doesn't always pay out. And you got to do whatever's necessary to do until your passion actually pays out. And if nothing else, it's really strengthened my faith. Um, I don't focus on the money quite as much as I used to. I don't want it to be my God or my idol. I enjoy it, but I don't want it to be my God or my idol. And the older I get, the more I realize there's less time on this rock, and definitely getting a little more sentimental. Enjoy when Kylie comes over, and even though I pick on her, and when Brianna drives in, and family's important. And I'm so glad that Al is gone. He needs that time. He gets to enjoy truly, and America's got some beautiful places. But I'm really kind of envious of Al right now. And jealousy is not a good biblical thing. You're not supposed to envy and covet, but I'm really kind of coveting where he's at. And maybe one day he'll invite me to go with him one summer and visit Germany with them. I would do that in a heartbeat. My co-teacher that I taught with this past 4 years, she is in Switzerland. My goodness. And I'm in North Texas during FIFA, where the traffic is now extremely crazy. However, we are taking, I can't say it, a secretive trip in July, and it'll be beautiful. It won't be the European beautiful, but it will be beautiful nonetheless. So I may have to do a GoFundMe account and let some TraideMasters members raise some funds so I can travel to Germany. or the Swiss Alps. And I'm sure those who are watching the video will definitely follow through with a GoFundMe. Guys, we're sitting at 6:40. We got 20 more minutes in our video presentation. I don't see any questions in the room at this time, and we're just enjoying the community at this point. Nothing's really changed for us. Uh, the Aussie US. I really like it, but it's very, very similar to the pound US and the Kiwi US. The Kiwi US, I think, is going to flip on us. The Kiwi tends to drop around the 7 o'clock area. So just be aware of that. So we don't have a rule in place for when the Kiwi starts dropping, but it historically hasn't stayed up once the US market starts going. So we want to be very, very careful. Maybe we move our stop. I don't have a rule for it. Maybe that's a rule that I need to have in my personal rule book, because to me it's forming a wedge pattern. Not that it's good or bad, but we're really wicky towards the top. I would think at this point, if I was comparing pairs to be in, I personally would prefer the Aussie US at this point than the Kiwi US. That does not mean it won't work. Let's just tell you why. Number one, historically, the Kiwi has dropped off at the opening and nearing the opening of the US dollar. Number two, we have this wick, we've got this wick. We've got this nice happening here. It needs to hold. If it will hold, then I may consider moving my stop up into this area, this rally, somewhat of a base and push off, instead of hanging myself all the way out here for a full pullback. Even though this is not 1% structurally, and I would write this down in my journal notes to consider a possible adjustment to my personal trade plan. I've seen the Kiwi work enough to know, again, we're not making predictions. I want to be very, very careful here. But I've seen it as it gets closer to the US opening that it tends to weaken and significantly weaken. We're going to talk about twos and threes, and it's just because that market's going to be closing, fully closing. So there's nothing really pressing it. Those individuals who trade in that area of the world are not pressing it any further. And so we end up finding this limbo land. The Aussie seems to be the stronger of the two pairs overall. China being involved in things like that. The Aussie plays a better game, in my opinion. The Aussie US, as I say. And so that's the reason I would consider getting out and readjusting and moving to this one, but I'm not going to. We're just going to leave it in demo. But if I was in my personal account, I would have a personal rule when it comes to the Kiwi US at this time of day. That's what I would be doing. And we'll just see. It's just a demo account, so I'm not really worried. It's not going to be $22.36. It's a quarter of that, so I'm not really worried. My only problem with this is if this one works and this one doesn't, I had a winning trade that should overcome the loss. In this case, I won't. And that's my problem with position sizing. So that's a platform issue. We're going to find out what that's all about today. Put that on my checklist. That'll be that's the most important thing out of my checklist. I'll do that before I even open my checklist. I even have my checklist on a spreadsheet. So when I check off the mark that I've done it, it calculates what percentage I have left to do, which is crazy, crazy stuff, crazy stuff. Again, if you're watching the video and you're new to the channel, definitely we want to encourage you to consider membership. Membership does have some extra bonuses coming along with it. Definitely community involvement, questions and answers, even one-on-ones from time to time. If you need a one-on-one, just ask as a member. We don't have all the answers, but we've been around long enough to kind of learn some things. And we have some tools that help us learn as well. I love the tools, but I am still going back. I'm still going back to loving the idea of completely turning things off and just looking at the chart, looking at what the broads are. You can see, and I would not, this is the area of on that 1 hour, but notice it's really where it was once resistance, it broke. This is a great place to buy. If Hercules is in your favorite long term, I would say that's a great place. It is the 57, call it 57.85 to 57.75 area. Great place. And you can see we're kind of to the top of our area. That's why it's a little squirrely. More conservative entry would have been if we broke that area. Again, we mentioned that before we ever entered the trade, so it's nothing that's surprising. But I definitely like looking at it. I don't want to do that. A discard. I definitely like looking when I'm in a trade. I definitely like turning things off, other than Hercules, because at this point, these are used for confirmation, and you can see that's on the 15. We've got that headwind ahead of us. That's just for confirmation. So now I can cleanly, and that's a personal preference. I'm not saying you have to do the same thing. Now I can cleanly look at it, not get any sort of emotional tie to it. It's going to be what it is. It's just nice. And so I'm going to do the same thing with this one, just because there's a lot of noise there that I just want to see what price is doing. And I can always turn them back on. But those tools are for confirmation only. And again, I'm going to reiterate this. We have several in our room, both in our non-paying room and our members area room, that want an automated signal system. And I'm really highly, highly tempted to only give those signals to them after I know they've watched our video on those signals so they can understand the context of them. Because trading a signal blindly is just dumb. It works for a time, and I say it's dumb because of personal experience. Every strategy will work for some period of time for some market condition. And when we built Sentinel, we mentioned this yesterday. When we built Sentinel, the markets looked a whole lot different in June of last year, from June of last year to February of this year. Looked a whole lot different. And it was built upon that. And the system is now learning that the market's changed. It's creating new numbers. We haven't automated it to create those for you yet. But I am not near as confident on Sentinel right now in this market condition as I was 6 months ago, because the market changed. And we've experienced that same thing historically when we had an individual trading gold for us. The market for gold was very, very clear. His strategy was a hard trend strategy. When the trend changed, guess what happened to our accounts? They went away. And so I am very, very cautious. I love alerts. Don't get me wrong. I love them because it draws my attention to look at the chart. I love getting those Tide Fusion alerts and having to stop already. When I look at my Tide Fusion, let's see if I can pull that up. When I look at my Tide Fusion on a 4-hour chart and I get this and I'm within the window, it tells me everything I need to know. And I can quickly put the trade on if it fits and walk away. Can I do it by my phone? I have. It doesn't take me long. So I like the alerts to have a little bit of a manual feel to them. Will there be an automation? Yeah, somewhat, but I don't know if I ever want to fully automate the signal. What we're going to be doing with the platform is giving you guys the opportunity to follow the alert. I'm going to take trades using the alerts. I'm going to manually do them. And if I see the alert come and it fits the parameter, I'm doing the work for you in that regard. But you're going to know why I'm doing it. You're going to understand why. But you can copy mirror trade is what it's called. Social trading, you can call it whatever you want. But if I enter a trade, you're going to enter the same trade with me. However, I still want to make sure that you're involved in understanding why I'm trading, because here's the fact. I'm going to have losing trades, and the last thing I want is a bunch of emails saying, why are you losing? Because I'm human. The goal is not 100% correct, although that would be great. Would love to be in that 60 to 65 window. Love that. In day trading, 55% would be my goal. If I can win 55% of the time following the trade plan, we're going to be making some money. So again, but people can't have that long-term vision for what 55% losing ratio means. They feel like, okay, I lost 2 trades today. That's 2%. And I lost 2 trades. That's only 4%. And then we win, but they got to have a bigger picture than a day to day, week to week, week to week. Even day trading, you probably need to be month to month. To be honest, you're going to have bad months though. With swing trading, I look at month and quarter And then obviously the annual. Day trading, I haven't really looked at that. This is really the first true day trading I'm doing, even in my live account, in a long time. Because by the time we got Sentinel really locked in, I was in school, so it made it very, very difficult. Sentinel is definitely a faster reaction, and I wasn't always available. Now look here, look at that. We could walk away right now and made 80 cents. Now it just went against us. Again, we're coming towards the top of our time with our video. Things are still looking good overall. Um, I'm not a big fan of, I love the movement here on the previous candle. I don't like the fact that we've gone red, although it's still, nobody's in control here. Wedge, look at the wedge. So let me talk about that just briefly, if it'll let me do that. I think it will. So a wedge looks like this, and we're kind of breaking out of it. I'm gonna just leave that as is right there. And then I come in here and you can do a flat one or you can do an upper one. I'll just go for the upper one right now. So what in theory is, and a lot of people trade this. We used to trade it too. I see them. I'm aware of them. A wedge can break out of this and it'll move up, then come back and test the midpoint line and move on up. It can blast straight up, or it can do the same thing on the downside. It can break through, come back and follow through. In this picture, we have no idea really what is out there. So I'm going to put my Tide Fusion and give me a prognosis. My prognosis is we're going to be moving upward, but more importantly than that is, what are Sherlock saying? Remember I said we would break down and then move back up. This is the area that you'd come breaking down to. If it really wants to fall apart, it's going to break through this. Same thing is, we're going to move up. We're going to hit an area, come back down, and then hopefully move on up. If it does, it's going to want to chew that area up. And so that's a wedge. It's just a consolidation. It's nothing magical, but it is a visual. Oh, I don't want to do that. It is a visual to keep your eye focused on. Why is it pausing? Again, we know that. Look at that 7-0. The US dollar just got weak. That could be good, or it could not matter much at all. Weakness is only weakness if there's some momentum volume behind it. Let's quickly look at that dollar and see what's happening on the dollar side. Yeah, okay, not necessarily weak. Just kind of, again, we've looked at our research and we're doing what our research says to do. And I'm not against this candle being red and being a bullish candle ending that way. That's not a bad deal. This one's just kind of laboring through. And notice we had that 6-1, it's an Aussie. It's looking a lot like this one. The difference is we know we were going into supply. The supply on this one's a little higher up. And that's why it looked a little bit better. Still have that pivot piece and all that stuff. So again, doing a market recap, we got a 5, 1, 1, 3. That's moved a little bit. 2, 4, 1, and R7 at this point. And we're closing in again, like I said, on that 7 o'clock hour. It'd be nice if on a Friday, Fridays usually are, can't say usually, sometimes appear to be that one day where the market does something different than it normally would do on like a Tuesday, Wednesday, Thursday. And I'm guessing it's because there is no market tomorrow, so people are closing out or whatever. So this may not have that reversal that I was talking about. That would be fantastic. We don't know. Can't make a prediction. We've had a couple of YouTubers pop in, pop out. That's good. Got a couple people in the room. Thanks, James, again for being faithful. Deb for being here. Al for stopping in and listening while you're in the Germany land. Missing Jonathan. We missed Jonathan the last few days. And we had Kay email me a couple. Kay's had a baby, so that's apparently he's not sleeping much anymore. That's a good sign, though. Congratulations to him. Eileen Medical, she's doing much better. Much better with the cancer report. Matt Matt was going to pop in. He's not been feeling well. It has his jiu-jitsu in the morning. So he's been watching the reviews at the end of the day. Now, this is just that reaction to that dollar that we saw going up. Notice the dollar's going up right there. I don't remember what this was. I guess 1, 2, 3, 4. 1, 2, 3, 4. That's the Euro US. So we're just reacting to that dollar push up. It's the same thing. Hopefully that's not a consistent, maybe that's that 7 o'clock reversal we were talking about. We don't know. This was kind of tanking on us, though. We got the 5-2, and the US is getting stronger. So that may be the prelim for the day, that this thing's gonna flip. We just don't know. We did our trade, we did our management, we let it be. And I'm really strongly contemplating this to move this up to that 250 mark, just because it'll be more equal to what the other losses are. And I don't want to skew my losses. So let me see something here. If I move it to 250, I like that area. Let's move it to right here. Just again, I want my losses to be more consistent based on that 1%, even though it's not 1%. I'm gonna make that adjustment just because it's not as it's not as fair because I'm not giving as much room. But and I may choose to move it back. I money. I mean, it's still 14 pips. I mean, it's still 14 pips, but it shouldn't cost me that much. So what are we hanging at right now? I may go back. And this is what we call tinkering. Exactly what I told you. That's that 7 pip mark. Oh, guys. I just know my report's going to look skewed. Like when I do my report at the end of the day, if it shows a $5 loss, it's going to look a whole lot heftier than my average $2.50 loss that we've had this week. And I don't want the analytics to be thrown off because I use those analytics to adjust. So I'm just going to leave it just like this. It's going to be what it is, and I can't change my analytics, but I am definitely going to find out why I can't have a fair and balanced risk portion here. These look right, other than they're 1 digit decimal off. This should be this is a half of a percent, not a full percent. This is way off. So we need to find out why. And let me take some screenshots so I can tell Telegram what I'm talking about. Let me see here. Let me do that. So I'm going to screenshot this. Oh, let me do it this way so I can see more. That's not what I wanted. I'm doing real good here, guys. There we go. I like this. Let me go ahead and screenshot this. And I know they have a support. I just don't know what that's going to do for me. I know they have that. Let's put TV1, trading V1. I just don't know how quickly they're going to get to me. And let's do the same picture and change it back to where it was, so they can get the full picture of what it was. Going back and forth, I know. It's $5 and something cents, something like down in here. Close enough. So I am now going to take a screenshot 1475 23 and good. And at least, that's not what I want. At least give me an explanation as to why, so I can plan better, if nothing else. And I will let you guys know. I don't know if y'all are experiencing the same thing as I am, but if you are, let me know. TV2. And then we will go back to our spot there. And really, That is not a horrible stop, either one of them. I just want my analytics to be correct. I think I'll end up getting tapped out on this because that's only a 7 pip move. I think that will get me tapped out. Team's probably going to work out, but it is what it is. All right, I'm going to go ahead and pause the video for now. If something does happen, I'll re-engage. If not, have a great weekend, but I'll pause the video for now. Hey guys, we found a solution in the wait time to our position sizing problem. When you go into your trading view, make sure that your top number right here says risk and percent of balance. So do the drop down, make sure it's not just percent of balance, but risk percent balance. Then you also want to make sure that you're selecting on your take profit pips and stop loss in pips. You'll put those in here and put your 1%, 1.5%, whatever floats your boat. That's when you do that. And from that point on, we should be in good shape. I'm going to leave these trades alone for today, but setting up for next week's going to be real good. So again, we'll pause the video because really nothing's happening in our trading other than we're trending and the things are starting to do the transition that we talked about. We will come back at a later time. All right, guys, we've had some major, now that the 7 o'clock Central, 8 o'clock Eastern time has come into play, you're noticing that our trades are going to be losing because we've had that flip that we were talking about. It's really not a flip. It's more or less the dollar came in stronger as the U.S. market's getting open. This is typical, to be honest, of momentum. It could be either way. It could go up or down, but you can tell that the day most likely wants to start with a strong dollar. My bet is gold is going to start weakening off, and it is a little bit, not as much as you would think. US yen is getting stronger as well. And then that means our losses are going to happen. And we did fix the problem here. Just quickly again, when you go over here to this, I want to make sure that you go to this drop down right here as well. Make sure it's on risk USD for both your take profit and your stop. And once we get out of these trades, that will be our technical, even though it's really not, our technical 2 losses for the day. That means we get permission to leave and be done for the day. And that's fantastic. We're not going to sit around and go, oh, now we've got this big, huge spread. We can trade the other side. Once we have 2 losses, you want to be very, very careful. That's why I'm really strongly consider being in one trade at a time, especially if they're highly correlated, like the one we were just in, pound US, Kiwi US, because if they win, both of them are going to win normally, and both of them are going to lose normally at the same time because they're keyed on the US being the secondary currency. That would be different if I was in the euro pound, euro yen against the Kiwi US or the pound yen. So correlation does matter and being in multiple trades. But we were in demo count showing you guys what the setup of the trade plan is, doing our part to find the setups. Again, correlation is huge. So my bet is it would not shock me one bit to see this thing because it's the way the markets know who I am. And my bet is this is going to possibly tap me out, come a little further, and then bounce all the way up. But who cares at this point? Markets really don't know who we are, but we're seeing the dollar is gaining strength for the opening. Not sure exactly what's happening with news. Nothing really major is happening with news today. Let's get back to our Friday. Well, we had China come in with some news earlier this morning recently that was better than expected, but overall, we don't have anything that's really going to be critical to us. The University of Michigan consumer sentiment, that's kind of cool. I would just tell you and caution you guys, Trump is telling you what he's doing. He's the only president that I recollect that was sometimes it's better that he just shut his mouth. But he did talk yesterday about what's going to happen with Iran. Apparently, if you believe what he says, and a lot of people don't, but he's on camera saying it. He usually is not going to lie to you. Usually, what he says, you're going to either totally agree with or think he's a complete idiot in doing whatever he's doing. It doesn't matter which side. Making money has no reason or political biases at all. But I will tell you that he mentioned in his press conference yesterday that he sees oil, and that's been our real hang up over the last 3 months. He sees oil not changing a whole lot. The Iran situation is going to be making a deal in the next day or so. And if you're like most Americans, we really don't put a whole lot of weight on that deal that the Iran is going to hold to it. But if they do and they sign this deal, apparently the United States has been stockpiling oil without anybody knowing it. Millions and millions of barrels. And the purpose of that apparently was to help control the inflation, that when the deal was made, the oil prices can suddenly go down and be more stable and the market stabilize with inflationary pressure easing off, which means prices of all consumer goods will also ease off. It won't be immediate. Nothing happens immediately. But this goes to play, and I'm looking at the a devil's advocate here. This plays into the political play. Again, we're getting ready for a midterm. If that's true of what he's been doing, it's genius. Because not only is it genius for a midterm election, it's genius economically. It is a strategy that I don't think any president has ever done, if it's really true. Hidden barrels, millions of barrels of oil, hidden. That is crazy. Now, if that's true, that should and now we've gone through the hard June and our numbers were not horribly. Now you're going to hear on social media where he says he loves inflation. Please make sure you watch the full video because he did say that he loves inflation, and you could stop the video there and say, "How dare he? He doesn't understand how much pressure our families are under." I went to Sam's Wholesale yesterday and purchased our meat for the next week or two, and I spent $100 just on the meat products. Crazy, crazy. So yes, there's inflationary pressure, but if you watch the rest of the video in context, he didn't say he loved inflation, and they stopped there. He talked about why it's going to be powerfully changed. So I would encourage you to find that video. I know that Glenn Beck talked about it, and I do listen to Glenn Beck. I think Glenn Beck, I don't agree with everything, but I think he talks with somewhat logic, matter of fact type talking. So I would encourage you to find that video. I just noticed on this pair, again, doing this for as many years as we've done, this is a W pattern. It broke the W here, moved up, and look where it's testing back. So there's a slight chance that this could pop back up. I'm not thinking so. I think it's going to dig back down further. So with that being said, we are definitely at our Friday mark. We all have a weekend to start, and we want to be able to be good stewards with our time just as much as our finances, our family. And Al, I'm going to encourage you. Al, when do you come back home?
Right now we're looking about the 28th.
So he'll be out for next week as well. I am not sure if we'll do a Monday market look. We'll see what the market looks like on Monday, but it will be in the members only area from moving forward. And again, we may be doing time savvy trader recordings and not live. I'm kind of wanting my evenings a little bit during the summer to spend with Kim and the family. We'll see how that goes. Again, family's more important, and especially with time savvy trader, you can really do it any Monday, any part of the day. And I love the community being there, but it's not necessarily beneficial for y'all to be there live. It's a great video series to watch even after the fact. So again, have a great weekend. Enjoy your family. Go to church. Do what you got to do. Play golf. Keep things in order of right priority. And we will see you guys hopefully on Monday. God bless everybody. I'll have a great trip. Enjoy it, Deb. See you soon. James, thanks for being in the room again today. Y'all have a great weekend.
Have a good week.